Look, Europe is heading for a recession. We know that. How deep do you think it's going to be?
Well, I think it could be deep. Look, we are deliberately shutting down big parts of the economy as a way of getting to grip with this crisis. The way non-essential parts of the economy is defined in places where they have shut down, where they are being shut down, is about 1/3 of GDP. That means that for every month that continues, it will cost about 3% of GDP, and that's before we sort of count the additional impacts through broader confidence factors. So this will have a very significant negative impact on the European economy in the short term. The good news is that the policy response is very powerful. Central banks are providing significant support. Public sector fiscal policy is providing very significant targeted support. The first instance is, of course, about saving lives, getting more resources to the health sector, but also a lot of targeted assistance to the ones directly affected, to household enterprises directly affected. And that is really critical. In the short run, it might not affect demand too much because people are sitting home. They cannot go out and shop. But it will mean that when we get out of when this thing is over, the recovery should be much faster, because we know that if people get out of work, we have these long-lasting effects. They lose skills. We know that if non-performing loans are allowed to impair households and banks and financial sector balance sheets, that would be a drag on growth. So these large injection of money to help enterprises and households is really very critically important for the prospect of a strong recovery when the medical crisis is over.
Yep. Mr. Thomsen, can we just back up a little bit? You talked about the very strong policy response that has been delivered thus far. I would agree. Christine Lagarde over at the ECB is throwing everything she can at this point in time. Formerly of the IMF, of course. But let's talk about what is happening when it comes to the fiscal front in Europe. The IMF learnt a great deal during its involvement during the Eurozone crisis. And one of the things that came out of that was a debate about whether or not there needed to be common debt issuance in Europe. Corona bonds are now being talked about actively in Europe. Does the IMF's experience during the Eurozone crisis lend it to believe that Corona bonds, joint debt issuance, would be a good idea at this point?
So Corona bonds is just one way of providing a European response. We are back in the old discussion, of course, about in a monetary union without a fiscal policy, common fiscal policy. What are the implications from that? We know that, as you said, the ECB has provided a very powerful response, and European leaders have instructed the Eurogroup to work on allowing the ESM to have a European response. That's one way of doing it. Corona bond would be another way. I think what is important is that there will be also a European component in addition to the national response. If there's one thing we have learned from the crisis 8 to 10 years ago is don't underestimate the European leaders' determination to take whatever actions are required.
Paul, the IMF managing director had said that more than 80 countries had asked for assistance, a couple of dozen or more of those middle-income countries. Have any European countries asked for actual assistance? Yes.
The ones we are focused on right now are in particular the smaller countries in Eastern and Central Europe outside the EU. The countries inside the EU and the advanced countries, they generally have the policy space that is required to act forcefully. If you get outside the EU, you have a number of countries with relatively shallow financial markets who don't have the confidence effect from strong linkages to the EU. There, the policy space is more limited. And actually, most of them have also asked for assistance from the IMF. I'm talking about the smaller countries, not the Russia, Turkey, but the smaller countries outside the EU are asking for assistance on our emergency facility.
How concerned are you for them, particularly given that year to date versus the US dollar, something like the Polish zloty is weaker by more than 8%, the Czech koruna as well more than 8%, Hungarian forint more than 9% lower. How critical is their situation?
Well, now you're going back inside the EU to the new member states. I think that they definitely have the policy space to react forcefully. Poland, Hungary, and other countries that you mentioned, they have significant buffers. They have reduced, many of them have had a significant reduction in public sector debt since the last crisis. They have strengthened their banking system. They have their buffers. These are not the countries that are on our radar screen right now. You have to go outside the EU to the smaller countries in Central and Eastern Europe, and this is where we are focusing our attention right now.